Welcome back to Retirement Coffee Talk with Sharice Rivers at Zinnia Wealth. Online, find us, zinniawealth.com, Zinnia wealth.com. Well, Sharice, you and I have been doing this show for, 12 years now?
Yeah,
something like that.
Time.
Okay.
Mm-hmm.
So if we do this show, we do the show every single week. And let's just say, for instance, there's 100 people that are sitting like an audience listening to us every single week. You know how many are actually going to take us up on sitting down and do some retirement planning? Of that 100 people, only 25 will do that. That's the number across the country of people who use financial advisors as opposed to those who don't. So I have a list in front of me of reasons that people don't use a financial advisor. So I wanted you to handle these for me. I'll go through them real quick. There's 6. Number 1, they can't find, or they try to find somebody they can trust. So trust is a big deal. Mm-hmm. Number 2, they think it's going to cost too much. Number 3, they think they can do this themselves. Number 4, they think that they'll have to give up control of their money. Number 5, they've had a bad past experience. And number 6, they've made some mistakes in their life and they are afraid that they're going to walk in the door and it's just going to be a shaken finger and it's just going to be a lot of judgment. So let's knock these off one at a time. Finding someone you can trust. That's got to be number 1.
It is. I will say people come in and, they ask. They've been listening on some radio show and they're just like, there's those stories of Bernie Madoff. And I said, oh, yes, those are awful stories. People wrote Bernie Madoff those checks. Mm-hmm. They weren't writing them directly to Fidelity. Transfers weren't taking place through Fidelity. It's going right through to his account, so he has control. So we don't have to worry about that because our Fidelity is the mainframe of who we use to access all the funds. So,
that's your custodian.
Yeah. So finding the custodian you can trust, I think, is a big thing because there are those Bernie Madoffs in the past. There's horror stories out there. Even on Google, you hear advisors took people for their money. You hear these fear mongers out there saying why you shouldn't have an advisor and you should just buy and hold because you're going to get to the same place, which is not a true statement. And so it's all the noise out there. It's hard. And then, maybe you got bounced around yourself while you were working. You had a 401k and you just got wrong information. Maybe you're listening to your neighbor. Maybe it was a family member and then you made a mistake and you took big losses. So I understand it's very hard to find someone that you can trust. And I recommend that you do not go with a financial advisor that you have any question about, you have any gut about, I don't know, but I really need one. I don't know. I really don't want to interview anymore. Do not pick a financial advisor until you find that right one. I'm giving you that voice and that power to make that decision because they've got to be right. Even if you come in and see us, you're like, I don't know, it's not right. I get it. Make sure it's right.
Okay. Well, there's a red flag right there to begin with. If you sit down with someone and it's ABC Wealth Management and they say, make your check out to ABC Wealth Management, run the other way. Okay. Run the other way. They've got to have a custodian. It's got to be somebody like, Fidelity or Vanguard or Schwab or something like that. That's where the money is kept, not with your advisor.
And that's the advice. And they very well they might not be, a Bernie Madoff type of Ponzi scheme, but that would be a first standard
red
of
flag,
advice.
Right?
Yeah.
All right. Number 2 is cost. People believe that financial advisors are very expensive. You and I have just had a conversation about fees. Mm-hmm. Talk to me about services. Talk to me about fair prices. Talk to me about how people are paid. And is it worth it?
Yeah. So it depends what you want, right? If you are riding solo and you don't even understand the stock market or you don't understand the alternatives and you're not going to do anything or make a move, the cost is probably worth it. But at what cost and what price point? And we talked about earlier, if you're being charged 2% on all your money, if you're being charged 1.5% on all your money, you're paying way too much. Your advisors should have some options for you that are free, 0 cost, some options that are 0.5%, some options are 1%. And if you're going really active and like day trading style, maybe 1.5, depending on what you're looking for. But saving is a big deal and cost is a big deal because you came from a 401k that had costs built into it. You didn't know it, but back in the day, they were 2%. They've gotten better. They're more like 1%. And I know people don't believe that because they don't see the fee, but they're there. Trust me, they're not doing stuff for free. And then you retire and you have all these advisors are saying, oh, Edelman's will charge you 1.25 or 1.5, and Fisher is going to charge 1.25 to 1.5. And you're thinking, gosh, maybe I need these guys. You only need them if you want to buy and hold strategy, right? And you're not looking for a retirement planner, and you're looking for what you did when you were in your 401k. But if you want a really well-oiled, holistic financial plan, you should be looking for an average of a 1% fee. Sometimes less, maybe sometimes a little higher, maybe 1.25, maybe. But they're doing tax planning, they're doing Social Security planning, they're doing Medicare planning. They're not a deer in the headlights when you need an elder attorney or you are going through a Medicaid spend down and a spouse just goes into a nursing home. Like, they've got that retirement program built in for you, and they're there every step of the way, right? But again, average for an aggregate portfolio, you really shouldn't be paying over 1%.
Well, you need to know what you're paying for. So if you walk in the door and they say 1 or 1.25%, you got to say, what am I getting for that? Because a buy and hold strategy, you can do that at home.
Yeah, you can.
You can do that at home.
And probably do just even better.
Well, let's talk about that. The next one on the list is they feel they can do it themselves. Talk to me about that one.
I'm going to give you a plot if you feel like you can do it yourself.
Okay.
Sorry, I had a pen in my hand at the same time. That was awful. So if you feel you can do it yourself, I'm going to implore you and say, go for it. And when you're sick and tired of being sick and tired, we'll be here waiting for you. That's all I got to say about that. Because you know what? Very well, some people do. I sat down with a doctor the other day, super smart. And I looked at what he did and why he did it. And I'm like, so why did you do this? Where are you going next? And he answered, he got an A. He got an A+ score on his test with me. I'm like, I love it, you, and I love what you're doing. And when you need me, I'll be here, but you're doing a great job until it's broke or until you just don't want to do it anymore. Just keep doing what you're doing. So there are some people out there, but don't think you're going to retire and all of a sudden be this math magician following stocks. Because I know you are out there. I talk to you all the time. All of you, I know who you are. And let me just say, it's exciting. You have time to really watch the market and you're going to be really great at it. But 9 out of 10 times, there's failure along the way and you're not sure what you did wrong. Oh, I wish I would have done that. I waited too long to get back in. I hear it all the time, and that's okay. Dare to explore. Just know we're here when you are sick and tired of being sick and tired.
Well, I just don't want to be on a cruise and walk past a television that has CNN on talking to me about a market crash, and I'm running to my phone and my computer while I'm on vacation, while I'm in retirement, and worried about that. I want somebody else to be
a lot of
doing that.
retirees do too, Randy. A lot of people is like, I'm handing over the reins. I want to enjoy life, go travel. And Cherise, you and your team deal with the stress. I'm like, I am honored that you want us to handle that for you, and no problem. That's what we do here.
There you go. All right. Number 4 on our list of reasons that people don't hire a financial advisor is they feel they have to give up control of their money.
Oh, well, I got an answer for this one. So we have a lot of people that fear that, like they're not ready to hand over the reins. So we do have a special program for the non 100% rein holders. and what that is we're going to have an account for you and we're going to manage some stuff. And then we're going to watch what you're managing over here. If you want to do buying and selling, because we can do trading privileges for you to do that. And when you come in for reviews, I might ask, why did you do that? And blah, blah, blah. And so a lot of people do love that because now we're kind of side by side. We're partners. And he's like, well, I saw you guys do this, so I did it. I'm like, well, I like it. But now we have overlap. We're doing the same thing. So I let my portfolio do something different than yours. So it's not all doing the same thing. They're like, oh, yeah. And so eventually they do hand over all those reins, but we do allow it. So don't feel like you're giving up control. You're a part of this conversation. You are a partner to us. We're sitting on the same side of the table. We want your accounts to grow. I want to make money. You want to make money. This is like a happy place to be in, right? Because when we're managing your money in the market, we don't make commissions, right? We're fiduciaries. We can't do that. So for the first time, we are aligned as individuals that are trying to invest our money and as financial advisors to say, hey, let's double this thing. How do we do it? Can you manage that risk? How do we do it? And I just think people really appreciate that part of what we do here.
Well, I think you've said in the past that sometimes people will kind of dip their toe in the water and say, Charisse, I like what you stand for. I like what I hear. I'm going to give you $500,000 to start, but that's not all of my assets. And I want to see how you do. It's a little bit of a test run, isn't it? And you don't have to turn over all your money to somebody. You don't have to do that.
No, I have an amazing client for years now. I remember he came in with $4 million. He's like, I'm going to give you $1 million. And the next year he gave me $2 million. And then the next year he's like, take it all. You're beating me. You're doing better. I didn't want to deal with this. I need to be enjoying retirement. And I'm like, I told you so.
Okay.
It was fun. He's a great one.
Number 5 on our list, we're going to kind of skip by because I think we've handled it, a bad experience in the past.
Yeah.
But number 6, I really can relate to because when you walk into a financial advisor's office, it's literally like opening up your underwear drawer. It's like, I'm going to show you all the good, all the bad. Yes, I dipped into my 401k because I got in credit card trouble. Yes, I made some mistakes. Yes, I invested in this. That was a bad idea. And it's all going to be right there for you to see. And they're afraid of that judgment.
Fear of judgment. I know. Get over yourselves. It's not about you. It's about that Rolodex of money you got sitting there. We need to make sure that counts. Listen. Some people, they come in and they've got millions. Some people come in, they've got 500,000. The job here at Zinnia Wealth is to take the fear out of retiring too late and making sure that you're on track. So don't fear judgment. This is a judgment-free zone because you and everyone else that comes in here, they don't speak the language we speak. They don't all have the same amount of money, but we're doing the same thing. If you got 4 million, if you have 500, we're still doing the income plan for you. We're still doing the tax plan for you. If you have 500, then we want to see, well, can you retire? Or, hey, are you retired and you're pulling too much money out and I see you run out of money right here? Do you plan to live longer than that? Like, it's that conversation. Don't be bashful. Don't fear judgment. We're always up for a curveball. And if we got to make changes or we got to help you or just do tough love conversations, hey, listen, if you keep doing this, you will run out of money. That is what you're coming in for because you need to know. And somebody's got to give you constructive criticism. I expect constructive criticism, and you should too, because that's positive criticism to help you for your future so that fear of running out of money, maybe it goes away, or that fear that you can't spend money because you might run out of money. Listen, put a plan together. Let's enjoy your retirement years, especially those go-go years, the first 10 years. Front load your income. Forget judgment. Enjoy life. Find somebody you trust and have that really great gut feeling about.
Well, we have to just take you from where you are right now. We can't be looking back. Yes, okay, there was a mistake made, but let's figure out where you are today and how we're going to get you to where you want to be. Give us a call. Let's do that complimentary retirement consultation. We do it at no charge. Give us a call, 833-368-3680, 833-368-3680, or our website, zinniawealth.com, ZINNIA wealth.com. There's a gold box at the bottom of the page. You'll see it says complimentary retirement consultation. You click on that, you'll be on your way.
Thanks for listening to the Retirement Coffee Talk podcast. If you have questions or would like to begin the process of building a tailored retirement plan, call Zinnia Wealth at 833-368-3680 or find us online at zinniawealth.com.
Investment advisory services offered through Zinnia Wealth Advisory, LLC, a registered investment advisor. The firm only conducts business in states where it is properly registered or is excluded from registration requirements. Registration is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. Insurance products are offered through Zinnia Wealth Management, LLC, Florida license L078655, and Charisse Rivers, Florida license P037744. Zinnia Wealth Advisory, LLC, and Zinnia Wealth Management, LLC are affiliated entities. The information presented is believed to be current. It should not be viewed as personalized investment advice. All expressions of opinion reflect the judgment of the presenter on the date of the podcast and are subject to change. The information presented is not an offer to buy or sell or a solicitation of any offer to buy or sell any of the securities discussed. You should consult with a professional advisor before implementing any of the strategies discussed. Any legal or tax information provided in this podcast is general in nature. Always consult an attorney or tax professional regarding your specific legal or tax situation. Any client experience discussed on this show are unique to that client. Annuity and life insurance guarantees are subject to the claims paying ability of the issuing insurance company. If you withdraw money from or surrender your contract within a certain time after investing, the insurance company may assess a surrender charge. Withdrawals may be subject to tax penalties and income taxes. Persons selling annuities or other insurance products receive compensation for these transactions. These commissions are separate and distinct from fees charged for advisory services. Insurance products also contain additional fees and expenses. Social Security rules and regulations are subject to change at any time. Always consult with your local Social Security office before acting upon any information provided herein. References to specific investments should not be construed as being past specific recommendations. The returns for various indices discussed in this podcast do not represent the performance of the firm or any of its advisory clients. Returns do not reflect the impact that advisory fees will have on an investment. Past performance may not be indicative of future results. All investment strategies have potential for profit or loss. Different types of investments involve higher and lower levels of risk. There is no guarantee that a specific investment strategy will be suitable or profitable for an investor's portfolio. Historical performance returns for investment indexes and/or categories usually do not deduct transaction and/or custodial charges or advisory fees, which would decrease historical performance results. There are no guarantees that a portfolio will match or outperform a specific benchmark. Investments in fixed income products are subject to liquidity risk, market risk, index rate risk, credit risk, inflation risk, purchasing power risk, and taxation risk. Because bond prices fluctuate continually, their yields change constantly.